Hello, it's Eric Singleton again, and welcome back to our website. Today, we're going to be covering Social Security and the benefits of Social Security while you're alive or after you're gone. But I have today with me. I will let you introduce yourself, please.
Well, thank you, Eric. My name is Maria Alvarez. I'm with the Social Security Administration. I am a public affairs specialist, and in that role, I provide education to the community about all of our programs, whether that's retirement, survivor, disability benefits, and also SSI. So
Great.
thanks
So
for having me.
we have the pro.
Yes,
That's good. That's good.
I'd like to think so.
Well, I think so. So today, we'll be talking about what happens when someone passes. I guess I'll start by saying, when you go to the funeral home and you sit down with the funeral director at the funeral home, he will ask you a series of questions. The questions he'll ask you for will be to put together the death certificate, and in doing so, the death certificate, that is, it then generates what we used to call a 721 form when we had to do it all. And that form is then sent to the Social Security office and alerts the Social Security office of someone's passing, and then they begin the process of a claim. So when that claim is then, it comes to your attention, what happens from that point on? Do you contact the family, or does the family have to contact you?
Well, the short answer is always, of course, it depends. But it depends upon whether that individual who passed away was already receiving benefits. Were there other people receiving benefits on that record? If the individual was not receiving benefits, we do need to know that the individual has passed away. Mostly we get the information from funeral homes, such as yours, but the family members also need to contact Social Security just to see if there's any eligibility for benefits for that family. At Social Security, we understand that when a loved one passes away, the family that's left behind can be left in a situation where they might be struggling financially because there's been loss of income. So what we like to do is speak with the family to see if their loved one was insured for Social Security benefits, and if so, to see if dependents or survivors would be entitled to any benefits.
Well, it's good to know that I've been doing the right thing by sending them to you.
Yes.
We also tell them to go to you and go on and start the process, even though the death certificate hasn't been issued. That way, when the death certificate has come, it's kind of like a pushing the button because everything else is in place. Now, when you said insured with Social Security, now does that mean insurance like an insurance policy, or does that mean enough quarters in order to qualify for benefits?
It means that the person worked long enough to be entitled to benefits, which, yes, quarters is a term that we use. We've changed the terminology to credits.
Okay.
And
I'm sorry. How do you determine how do I know how many credits I have, or how do I know I'm accruing credits?
Absolutely. Well, look on your check stub. If you see, usually it's indicated as FICA, FICA. That is your Social Security and Medicare contributions. So you know you're contributing in. If you work in the private sector, everyone pretty much contributes into Social Security. If you're an employee, you could also contribute through self-employment. Certain state, city, and local government employees don't contribute into Social Security. They strictly contribute into that state, city, or local government pension. But that's the way to know. Also, you can, on our website, create an account called the My Social Security account. You authenticate your identity by answering some questions, and then it allows you to take a look at your Social Security information. And one of the main things it will tell you is how many credits you have, and if you're already entitled to Social Security benefits. So that's a great financial planning tool for people of all ages. Even if you're at your first job out of college, you need to complete a My Social Security account. Keep track of your Social Security earnings information. Make sure it's all posted accurately, and to keep track to see how many credits you do.
Does it also allow you to know if somebody's tried to access your Social Security?
It does not. That's probably something we'll be able to do in the future, perhaps, but not at.
Okay. And so, does Social Security and disability work hand in hand?
Yes, we manage Social Security disability programs as well as retirement and survivor. The disability program, the requirements as far as credits are a little bit different from disability. When a person comes in to file for disability, we look to see if they've contributed in recently, and depending upon their age, determines how much they have to have contributed recently.
So you have to have contributed to disability in order to get it.
Absolutely.
Okay.
However, we also have a program that's called Supplemental Security Income. That program is managed by Social Security, but it's a little bit different because it does not require contributions into Social Security. It's for those individuals that, for whatever reason, have not been able to pay into Social Security enough or long enough. Think about the person who maybe has had a childhood disability or condition who has not been able to go out into the workforce and pay in. SSI or Supplemental Security Income would be a program that would benefit them. The criteria, however, is not only do you have to be disabled and found disabled through Social Security, but you do have to have very limited income and resources. So that's a different program from the Social Security Disability Program where you do have to have worked and paid in. Now, for retirement, the criteria is a little different in that for retirement, we don't look to see that you've been contributing recently. In other words, for Social Security retirement, you could have paid in for the first part of your, working years, and then say a good example would be a stay-at-home mom or dad who worked, paid in at least 10 years, let's say, but then stayed at home and raised the kids, and then either didn't go back into the workforce or went back into the workforce in their later years. But we're not looking for recent contributions for retirement. Those contributions, whenever you made them, are etched in stones for you. But for Social Security disability, depending upon your age, we are going to look to see if you've contributed in the past so many years prior to becoming disabled.
Okay. But when you're getting ready to retire, I know we're way off topic. When you're getting ready to retire, that would be me. I'm kidding. When you get ready to retire, do they look at the max that you've ever made as well as the least that you've made? Is there some formulation?
There is. We look actually at your highest 35 years of contributions. And I know that sounds like a lot of years, but unfortunately, we spend easily 35 years in the workforce, usually more. So it's not hard to find your highest 35 years. We index those earnings for inflation, turns them into today's dollar values, and then we find an average of your highest 35 years. So it increases that average that we work for in the computation. So for Social Security, you pay in a percentage of your earnings. So it's not just how long you pay in, but the salary level at which you pay in. A lot of people like to compare their 35 years of contributions to their neighbors. And we're probably talking apples and oranges because they may have been at a much higher salary level than you, or vice versa. So the comparison is not always the same.
So I'd have to work for another 35 years in order to get a decent Social Security check.
The more you work and pay in, the more years, and the higher your salary level, the higher your benefit amount is going to be.
Okay. This if there's still a Social Security system.
Oh no, it's going to be around.
Oh, great.
Keep in mind, Social Security's been around. We're getting close. We're getting close to 90 years now.
Okay.
So it's been around. It doesn't operate today the way it did in its earlier years because we've had to adjust for changes in the economy, changes in demographics. But here we are. Exactly. But here we are.
You lived about 2 years after you retired.
That's exactly right. And now we're living easily 30 years into retirement. If you retire in your 60s, we've just been talking, we both have parents in our 90s. So they've been in retirement for 30 years. So
My grandmother was in retirement from 30 years.
yeah.
My mother's only been in retirement for about 15. She kept quick.
And we're finding that trend actually because we're staying healthier and more productive in our later years. So people are finding that they're wanting to go back and do a little work, even though they're receiving their retirement check.
Right. I guess that'll be what happens to me. So and then your check is cut by your salary if you go back to work.
It's only reduced if you are receiving your benefit check in retirement and you're under full retirement age. And we all have a full retirement age. It's based upon the year of birth. But if you work after your full retirement age, you can work and earn however much you want, and it does not affect your benefit check whatsoever. So to give you an idea, people retiring or close to retirement today, let's say you were born 1960 and later, your full retirement age is 67. But if you were born prior to 1960, your full retirement age would have been a little younger than that. So just to give you an idea.
So if you choose to retire at 65, at 67 does the make as much as you want kick in?
That's a great question that I hear often, but unfortunately it does not. If you take it early, you pretty much commit to receiving a lesser amount going forward. But you know, Eric, it's the cup is halfway full or halfway empty type of thinking that you have to use there. Yes, you're taking a lower benefit, but you're taking it for a long period of time.
Yeah, gotcha. So now let's get to the good stuff. Once you pass, if you're receiving Social Security benefits, once you passed, is there a survival benefit?
There is potentially a survivor benefit. If you pass and you were receiving Social Security and there are people receiving benefits on your record, those are likely to be the people that, number one, might be entitled to receive a lump sum death benefit. So let's talk about that a little bit. It's $255. It's a one-time payment, and a spouse that was living with the deceased is the number one potential recipient. If there is not a spouse living in the household with the deceased, but there's a minor child that is unmarried, they're potentially eligible for that lump sum benefit. Sometimes unmarried or married adult children under certain conditions qualify. Let's say that they have a disability that they acquired prior to age 22, so they might be receiving benefits on the deceased's record. They might be entitled to that lump sum benefit. But also a spouse who is not living with the deceased at the time of death is potentially eligible to receive that lump sum benefit if they're receiving a benefit on the deceased person's record. So I know it's a lot of information. That's why we tell families to get in touch with Social Security to determine if there is potential eligibility for either that lump sum benefit or for survivor benefits.
And it's the magic number being together with somebody for 10 years.
That's if you are an ex-spouse, meaning that you are divorced from the individual. You have potential eligibility if you were married to them for 10 years or more. But if you were currently married to the individual who is deceased, we're only looking to see if you were married at least 9 months prior to death. Mm-hmm.
So if I wasn't married 9 months prior to death, then I might not be entitled to.
You may not, and the thing there is that people could marry a terminally ill individual just to become eligible for that benefit. So about no.
I wouldn't make a good criminal.
So, it doesn't happen often, but we do like to look into that situation and go closer.
So if I'm married and I have underage children and my wife may not be working, would she be entitled to benefits too?
Once again, it's possible. There's a lot of different provisions that go into the eligibility criteria for survivor benefits. A spouse has to be at least 60 to even consider filing, or 50 if the spouse is disabled and found to be disabled through Social Security. So there is that potential entitlement there. However, we do have to look to see if the individual is working, to see if they meet certain work criteria. But the primary and criteria is their age, at least 60, and 50 if disabled and found disabled by Social Security.
But what, one of them in her 30s or 40s is qualifying?
No, there is an age requirement. A lot of times widowers will come to us and say, I want to file for a benefit, but they're not of age yet. The thinking there is that they're still in prime years, still able to work if they can. But that's why that provision of if you're 50 and disabled, then you might have it.
But if there's an underage child in the house, the underage child.
Correct. And in that situation, actually, the spouse who has a child under age 16 in their care may, in fact, be able to draw a benefit. So there's a lot of eligibility. Yeah, so that's why, the best thing to do is to check with the Social Security office for eligibility.
So if there is a child in the house under 16, the spouse is eligible to get benefits as well as a kid. At what point would she or he roll off?
The child?
The adult.
The adult, once the child is no longer able or eligible to receive benefits, but technically up until age 16 or later, if the child is in high school, even if they're 18 or 19 and still in high school, they might be able to continue getting that benefit.
But the child will get the benefit
correct
until he's 19.
He is still in high school. Correct. Now,
if he's 18 or 17 and graduates from high school.
Correct. Because you might have an 18 or 19-year-old in college no longer eligible.
Okay.
Yeah. So a lot of possible eligibility for survivor benefits. Like you said, a lot of twists and turns there in the eligibility with the eligibility provision. So So definitely it's good to for an individual to check all those potential entitlements.
And there's no way to get the Social Security office to pay, or the Social Security system to pay more than the 255 lump sum death benefit.
Not at this time. Not at this time. I'm not sure if that'll change in the future.
Okay. And then there's nothing. There's no lump sum for the child. If there's no parent, does the child then become eligible for the 255?
It's very possible if they're a minor, unmarried child. Yes.
And what happens with the child, though? What if someone takes? I won't say takes possession, but if somebody decides to be the
guardian.
the guardian for the child.
It's possible the payment would be issued, to the child, and let's say there's a guardian who manages the benefits. The child is potentially eligible.
Okay, but the guardian wouldn't necessarily.
No.
The child.
Absolutely.
And so, is there a protection so that the guardian doesn't take advantage of the kid's money?
Well, yes. I mean, that gets into the representative payee provisions, and it depends. Normally, the child probably would be receiving benefits under the deceased's records. So, of course, as the child is a minor, we would appoint what's called a representative payee. A lot of times it is the guardian, but we do have our own criteria for who we think is the best representative payee. So
Check to make sure that he is buy clothes and
absolutely. We monitor that closely, and the representative payee would normally be the person with whom the child lives, providing they meet a lot of other criteria. Absolutely.
So, is there anything else you think we need to? Did I miss?
One of the provisions that is also in place, Eric, is, and it's not as well known as the other survivor benefits, but for example, if an elderly person has an adult child that's providing at least one half of their support, let's say that that elderly individual does not have any income or very, very little income, and that child is providing more than half of their support, if that adult child who's providing that support passes away, there is a possibility that that parent can draw a Social Security benefit as a survivor on that adult child's record. There's a lot of other criteria that we have to look into, but I might all be here to come.
Mortgage was paid by
Correct. So, but in the rare situation where an elderly parent has very little or no income, and that adult child that has now passed away, it can no longer provide, there might be a possibility of benefits for that elderly parent.
But then how does that affect my spouse?
It does not.
So it wouldn't affect the amount of money she would be receiving.
Does not.
Okay, great. What about a second marriage?
There's all kinds of provisions. The eligibility criteria on who can draw on a deceased record is vast. Remember, you have to meet age criteria. You have to meet length of marriage provision. You have to be unmarried if you're going to want to draw on your ex. And we could talk for days about that.
So if I have 11 years on 3 different women, then all 3 of them would be entitled.
They may. Yeah. But remember, they have a lot of criteria that they have to meet, and you can only be married to so many people, at least 10 years at a time. Or maybe that's what caused your death.
That would do it.
So there is a lot of qualifying criteria. we it's possible, but
But would
we usually
would
don't.
they then split?
No.
So if I was eligible for $1,000, they would each get about.
It's potential. It's like I said, there's a lot that goes into determining the benefit amount and so on and so forth. But the good part is that if we pay, two spouses on someone's record, the fact that we're paying one does not affect the other.
Okay.
And that could be up to 3, yes.
But let me ask you this about court order child support. I might have 3 or 4 different children for 3 or 4 different women, and I die. Then does that, whatever eligibility I had, would their child support continue the same level, or would it change to whatever I would be receiving?
Okay, now child support is something totally different that usually is through the state.
Right.
But as far as Social Security benefits for children, there is what we call a family maximum. So if there's a person who was eligible for benefits, they pass away, or they're even living, and they have a number of children who are eligible, what we look to see is, well, how much did that person pay in and how much are they eligible for? The more they're eligible for, the more children we will be able to pay. And there is a complicated formula for that. But if you were a person who paid in fairly modestly and you have a number of children that might qualify on your record, chances are that we're not going to be able to pay all of them as your dependents. But as they age out, as they reach age 18, we may be able to put another minor on that benefit. But there is...
So if it's $1,000, it gets split 3 ways. As the first one gets to 18, then the second one might get a little bit more. And
it's a formula. It's a formula. It's actually not that simple a process. But yes, the more the worker was eligible for, the higher the benefit amount for the minor children, and the more minor children we may be able to pay. It's called a family max amount that we determine.
Okay.
But those are all the things that Social Security looks into. That's why we recommend that if a worker passes away in a family, there are minor children, there's a spouse, we recommend that they contact us so that we can look into all those potential eligibility factors. It's impossible for, let's say, what I'm going to use loosely as a layperson to know all the specifics or and twists and turns about eligibility criteria. So if they contact us, we will ask the questions and we will absolutely look into all those potential eligibility factors.
As usual with the government, everything is there's what papers that thick, and then there's some more papers that thick.
I always say, when people file for benefits, they think we're very nosy because we ask so many questions that the person, probably thinks, why do they need to know that? But the reason we need to know that is because we're looking for all these very unique eligibility criteria so that we can pay the benefit. And by law, we are responsible for paying any eligible survivor of a person who has passed away, or of a retiree, or of a disabled person who has dependents.
Well, that's great. Well, Maria, I want to thank you for taking the time to talk to us. We're going to have the information posted on our website. We'll also have the link to the Social Security
website.
Absolutely. Thank you. The Social Security website posted on so that you can access it and obtain more information about Social Security benefits and what you may or may not be eligible for. And there'll also be an 800 number you'll be able to call Social Security and find out additional information. We're just trying to give you enough information to kind of get you started, point it in the right direction. And again, thank you for taking the time to talk with us or with me and for providing us with so much good information, but before and after the camp. So thank you again. Thank you. It's been my pleasure to meet you.
My pleasure, Eric. Thank you.